Hey everyone, in this video I'm going to answer which is the better dividend stock to buy, AT&T or Altria Group. Now I'm going to compare these two on dividend yield, revenue, cash flow, operating margin, and valuation, and then answer which one is the better dividend stock to buy. So let's get right into it, starting with the dividend yield. And 8.73% is the dividend yield offered by Altria Group, a very robust dividend yield. AT&T at a slightly lower 7.85% dividend yield. Both are very high dividend yields for passive income investors, especially when you compare with the 10-year government bond as of today, which was offering investors a yield of a little over 4.2%. So compare that and you get a very nice return. Now, remember, when you're investing in dividend stocks, you do have the risk that the stock price falls, and so it could take away some of that dividend yield, where you don't have that risk when you're investing in government bonds that offer the 4% yield. So keep that in mind when you're investing in dividend stocks. So let's look at the next thing, revenue. And on revenue, AT&T, I want to highlight this big dip you see here from 45 billion down to 29 billion. That was mostly due to a divestiture selling a big part of its business, which caused the revenue to fall considerably down to 29.9 billion. So looking back longer term, that's the big picture to keep in mind there. Going forward, if you're thinking about AT&T, think about AT&T like a company that's not going to grow very quickly. You'll be lucky if AT&T gives you low to mid single digits revenue growth for the next 5 to 10 years. It's in a mature industry. Revenue growth is not something the company is prioritizing. Altria Group, meanwhile, similar story without the divestiture. It's not a growth company. Of course, tobacco sales are falling worldwide. Unit sales as are falling, and then it's making it up by price increases, but relatively flat. Again, you'd be lucky if you can get low single digit revenue growth from Altria Group. 5.4 billion quarterly revenue. Stable revenues even would be nice, because you're going to see this company is very profitable. That leads me to the next metric I wanted to compare these two on, which is operating profit margin over the trailing 12 months. Altria Group at a phenomenal 56% operating profit margin compared to 19.92% for AT&T. Both operating profit margins are good. It's just Altria makes AT&T look poor at 19.92%, but believe me, a 19.92% operating profit margin is enviable for many of the publicly traded companies in the world today. Altria is just among the leaders of the leaders in terms of operating profit margin. To demonstrate just how great its operating profit margin is, the highest operating profit margin company I follow is Visa, which is in the mid to high 60%. I think 67% is Visa's operating profit margin. So Altria Group is right up there among the highest of the operating profit margin companies in the world. The next metric I wanted to compare is cash flow from operations to sales, and this excludes some non-cash expenses like depreciation and stock-based compensation to give a different look on profitability and cash flow. And according to this metric, again, Altria Group well ahead of AT&T at 42.53% compared to 30.45% for AT&T. Again, let me reiterate that both of these percentages are very good on their own. It's just AT&T compared to Altria looks like it's at a huge disadvantage. That may be the case, but 30% cash flow from operations to sales, again, is a very enviable ratio to boast. Finally, I wanted to compare these two on valuation, and Altria Group is selling at a premium at a forward price to earnings of 8.3, just about 50 or 60 let's say 50% more expensive than AT&T, trading at a forward price to earnings of 5.687. Although when I look at all the performance metrics that we looked at up until this point, I am willing to pay a premium valuation for Altria Group, and I think I would be willing to pay more than this premium that exists today. So I would, if I was to pick one of these two dividend stocks right now, I would pick Altria Group. I think the company's performance is phenomenal. The operating profit margin is in the league of its own, up there with Visa and MasterCard, and very few select companies that can garner those kinds of profit margins. And so, for that reason, I would go with Altria Group as my choice for the better dividend stock to buy. But that's it for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.